Good morning. Welcome to IG's early morning call. It's Wednesday, the 15th of March. Let's take a look at the headlines as we await what looks like to be a slightly stronger start to the European equity markets. We've been following up on some of the economic data out overnight, which shows an uneven recovery in the Chinese economy. Retail sales swinging back to growth, but industrial production still on the way down. Sterling very much in focus across the European markets today. We've got the budget due just after midday UK time today. The Chancellor of the Exchequer is expected to unveil what is widely anticipated as a budget for growth, but could there be some disturbance in the wings about the overall vote in favour of what some are expecting to be an increase in corporation tax? And oil prices, well, on the way down. We're now at levels not seen since the back end of 2022. A little bit of a bite in interest, though, as OPEC comes out with a report suggesting that there could well be an increase in oil demand in China around the corner. Take a look at volatility. We're down for a second day, indicating this interest in the markets as we see a little bit more buying around the edges of what we've got in terms of some of the risk assets. And this is illustrated here by the London markets. The going into the back end of last week and the Monday session particularly badly hit as a result of the unwinding of SVB. But that recovery yesterday, mostly banks, mostly those financials doing much of the upside business yesterday. But we've got to build on that at the moment at 76.35. So a little bit of interest continuing to bite on the London markets. Germany, seen a positive news headline this morning out of BMW, which I'll cover in just a few moments' time, holding on to yesterday's gains at 15,244, and same sort of price action on the French markets. That gain yesterday was still not anything like the sort of losses, making up the losses that we saw on Monday for any of these markets. But nonetheless, there is, as I said, some biting around the edges of some of these low prices we've seen in some equities. Of course, what is always happening in these markets is that you get these wild swings. And quite often you see a lot of the market taken down, which doesn't really deserve to be taken down, like some of these defensives and some of the stocks that are very much in the frame for potential upside. And they get taken down too, so it provides all sorts of opportunities for buying at the margins on these markets. Let's take a look at what's happening across the Asia-Pacific markets in the session in today's trade. We've got gains across the board. Hang Seng Stock Index doing much of the upside with that positive news headline coming through for retail sales in China, up 1.25% for the Hang Seng as we see at the moment. Nikkei closing with gains on the trading day, but only by a small margin. ASX 200, more upside that we've seen some buying back into some of those commodities, especially in banks as well, doing well overall in the Asia-Pacific markets in the session today. Wall Street closed last night. Yesterday, US inflation came in slightly lower than forecast for the full year. We saw gains across the board on hopes that the Fed's not going to be aggressive like it has been recently when it next meets to discuss interest rates next week. Many are now saying that there potentially could well be an unwinding of some of the gains that we see in interest rates by the end of this year. All will be revealed, or some of it will be revealed at 6 o'clock next Wednesday, when we see the Federal Reserve come through with its interest rate decision. Growth stocks doing much of the upside lifting yesterday. Despite the fact we saw US inflation coming in slightly lower than forecast for the full year, we think we have inflation bad in the West. Spare a thought for Argentina in South America. February inflation up a whopping 103% year on year, passing a level last seen in 1991. So inflation may be on the way up and still indeed growing across some of these Western economies, all but by a slower rate. But Argentina up 103% year on year. Let's take a look at the early trade for, first of all, the NASDAQ. With that big gain that we saw yesterday, you can see in today's session at the moment, little doji star candle, absolutely on where we saw the close yesterday at 12,207. At least we're not seeing any more potential downside. One of the tweets I sent out earlier today indicated that I felt that there was this weakness in the markets. I want to illustrate this by looking at what's been happening on the NASDAQ. That drop we saw there down below the low point we saw back on the 31st of January. And in fact, we are at levels not seen since the 25th of January as of yesterday's, low point we saw a couple of days ago. Yesterday's trade, we saw this buying back in, but we're still not getting higher highs. That's the problem. We get these markets, you can see in the longer term, we are on the way down. Let's take a look at what's happening on the Dow, which I think is even more obvious, I think, with that spike lower that we saw yesterday there, down to levels not seen since the 26th of October last year. So we are at 2023 lows plus. for the Dow in the last couple of days or so, buying back into that market yesterday. But you can see the relative, how do you call it, anemic recovery, I suppose is probably the best way of putting it. It's fragile. I think compared to the losses we've seen recently, we shouldn't be celebrating any upside here. It's just a question of retracing. And I suspect we could well see some new lower lows here. And indeed, if you get a new lower print and you get a candle close below this level at 31,710 for the Dow, there's then not much stopping it all the way down to this level down here, which are the lows we had back on the 20th of October at 30,000. So could we see 2,100 points lost? It's very likely, given the frailty of these gains that we're seeing today. I suspect there could well be some further downside to go. I think we've yet to see anything like the sort of unwinding of some of these risky bank stocks that we had that operate in the margins. Some regional US banks were severely hit after that SVB collapse. They're pairing some of their losses in yesterday's session. First Republic Bank rose 27%, PacWest Bancorp 33% up, and Western Alliance up 14%. Major banks, all sessions on the IG platform also rose yesterday. Wells Fargo up by 5.1%, Citigroup 6% up. JP Morgan Chase, one of the better performing banks. Let me just show you JP Morgan's share price chart just to explain what happened yesterday with some of these recoveries. This is an all session stock. We saw a recovery in the trading day yesterday. This will open at 9 o'clock again this morning. 2.7% up for JP Morgan. As I said, some of the other banking stocks doing well in yesterday's session. This is Wells Fargo, an all session stock. But these gains are nothing like the losses that we've seen recently. So as I said, we shouldn't really be celebrating a rise. We should be monitoring continued weakness in some of these banks. Let me show you what's been happening as well on the foreign exchange markets with this weakness in the dollar that we've seen. Seems to have found some sort of support in the currency markets. This dollar index trading with a support at the green line here, which is the 50-period moving average, just below where we are at 103.33. And I think it's worth looking at this move that we've seen in the dollar, how it's playing out in the gold markets with some really hefty gains. Yesterday we saw losses. Again, losses today, we're now below the 1900 level. There is a significance in terms of round numbers, but the broad sweep of things, I think, is that we've got the weakness showing in the markets for indices, the risk assets. I think this is showing a little bit of strength, and potentially we could well see some further upside to go. If you were long on this and you wanted to target, I would be targeting the highs that we had there back on the 2nd of February. At 1959.8 would be the first stop-off point. And then, of course, you've got these highs you have here back in April 2022 at 1998, almost at the 2000 level. So that is the direction of travel, I think, for gold. We got this big, strong showing yesterday. And if we get further weakness in the dollar, that could see further upside. Much of what we got for the dollar has been hinged on what's happening with interest rates. And we get that Fed meeting next week. With the Fed expected to indicate that it's now looking at ways of trying to stem some of the upside on its tightening. Now, as traders continue to assess the fallout from SVB collapse, Angeline Ong has taken a look for us at what Asian countries are saying and which companies in the region could well be affected.
Certainly, Jerry, could take a while for this SVB ripple effect to shake out. Meetings have been going on throughout the night. I can tell you that countries like India and China and Japan have said they do not see any material impact just yet. But the reality is, Jerry, no one knows just how far SVB's tentacles go. Let's have a look at the chart here. SVB, as you can see, they're tanking after the collapse. And also Asian banking stocks extended their declines earlier in the week, showing you Japan there and also Australia's ASX. This in particular is indicative of how hard the financial firms have been hit due to anxiety about systemic risks which sparked a wider rout in the markets. Selling earlier in the week had the Tokyo Stock Exchange Banks Index down 16%, its sharpest drop since the days after the 2011 earthquake and tsunami which struck Japan. Australia's productivity software maker Nitro. This is a software firm. It has around 12 million of its global cash reserves held on deposit with SVB. Now, US companies have disclosed around $5 billion in deposits implicated, besides various credit facilities. Big names like Roku, Roblox, and online styling service Stitch Fix. In Europe, around 16 tech and life sciences companies have also disclosed around $190 million in exposure to SVB. With Asia, it remains to be seen what the final figure will be.
Now in China, industrial production rose 2.4% in the month of January, the January to February period, that is, year on year, missing expectations of a 2.6% gain. But retail sales rebounded in China after 3 months of declines, the index rising 3.5% in the first 2 months from this time last year. The result was in line with expectations. You get this block booking of data coming through, which includes the Lunar New Year, but whichever way you cut it, it's good for retail sales, but not so good in terms of the expansion for the industrial production number. Fixed asset investment, you can see there, rising 5.5%, higher than this time last year compared with the forecast for 4.4% rise. So that's pretty good. Let's take a look at what's been happening on the foreign exchange markets for the CNH. This is the offshore yuan. This is the dollar rising for a second day in a row at 68.960. Now, here in the UK, the Chancellor of the Exchequer will stand on the board today for the House of Commons. Jeremy Hunt is due to deliver the budget to the House of Commons at 12:30 p.m. Today. It's the spring budget. The Chancellor wants businesses to be the main beneficiary of the measures. He will announce measures intended to boost investment and to offset tax changes that will take effect next month on corporation tax. Hunt has already said he will stick to his plan to increase corporation tax to 25%. Job vacancies, another issue he wants to tackle. There are currently 1.1 million vacancies in the British labour market, so expect a series of incentives. Rules for migrant workers will be relaxed. Jeremy Hunt also wants to help parents to return to work and is likely to expand free childcare for parents of 1- and 2-year-olds. Meanwhile, cost of living will also be addressed. Fuel duty should be kept down, and the £2,500 energy price guarantee has been extended as of news headlines this morning. And I wanted to take a look at where we are in terms of sterling's direction of travel. This is sterling against the European single currency. You can see these lower highs for sterling indicating that we're just not getting any traction on the upside for the pound against the euro. Be interested to see what happens today. These budgets are now relatively boring compared to previous years or decade or so ago, certainly before the great financial crisis. There was really an element of surprise back then. There isn't anymore. All the headlines come out, the pre-releases, just indicating exactly what's going to be said. It's just a question of how long it goes. And some of the bets on just how many words in certain categories he will talk about, and some of the more frivolous betting that goes on the sidelines of these things. But the bottom line is, he's got to be careful. He is known to be prudent, and it's just a question of just how much he will follow through on what he has already said he intends to do in his spring budget when he gets up to talk about that at 12:30 today. This is sterling against the euro. Just wanted to update you as well on what's happening with sterling against the US dollar. Same sort of thing, I think, really. You've got these this recovery in sterling in the last couple of days hasn't really beaten the highs we saw back on the 14th of February. I think longer term we could well see some weakness. Some of what we've seen recently on the upside has been as a result of expectations the Fed could well continue to take its foot off the pedal in terms of interest rates. 121.57 is where sterling is trading at the moment against the US dollar. Talking about the dollar, 12:30 p.m. today, UK time, we get retail sales expected in the States to fall to 0.3% in February month on month. Producer prices expected to rise by the same margin in February month on month, 5.4% year on year. And then later on in the day, we get NAHB housing market index. Expectations are for reading of 40. That's down from 42 in the month of February. Now, let's shift gears and take a look at some of the stocks worth watching at the start of the day's trade. I want to pick up a chart, first of all, of the Prudential, the insurance company, which is really big in Asia these days. We've seen this recovery and we've seen it topping out recently at 1381. It said operating profit was up 8% in 2022 to $3.38 billion. The result beating forecast around $3.34 billion. from 22 analyst forecasts provided by the company itself. Prudential's annualized premium equivalent sales, this is a closely watched gauge of insurance sales, jumping 15% for the first 2 months of this year from the same period this time last year. I think broadly speaking, these numbers are looking good. And I was talking at the start about some of these companies are getting beaten up for no reason other than the fact that they are part of, let's say in this case, the FTSE 100. And this could well be one of the cases in question where people could well find a reason to buy back into this stock. Given these good numbers this morning, the insurer has now completed the move of its entire senior management team from London to Hong Kong, its new global headquarters, which is closer to its major revenue sources. So that's also in the announcement this morning. The stock will open at 11.83. If you're long on this, your stock would go underneath this area down here below the 100-period moving average at around about the £11.20 level. That's the numbers out there from the Prudential. Let me just quickly wrap what's happening on the civil engineering sector with Balfour Beatty. Full year numbers out there from the company. Pre-tax profit 287 million. Now the underlying profit from operations up a whopping 42% to 279 million. Revenues 8.93 billion. These are looking pretty good numbers, I think, on the whole. We know that some of the big infrastructure projects which this company benefits from of these government contracts, which I think is really all about what this company does and what the dynamics are going on here. Balfour Beatty yesterday bouncing off this line of support which was established here back on the 16th of December. In fact, it was resistance as well if you go back to the 18th of August last year. So 332 is an interesting number to watch out for. If you're long on this, going to the numbers this morning, stock goes underneath the recent price action around about the 320 pence level. 339.2 is where we open today's trade. I've just briefly gone through some of the headlines, which to me look pretty good. That's the positioning for me going into the start of today's trade. It's not a recommendation. If you want to take a position, obviously you'll do your own research. But at the moment, at least, if I was to look for gains, my stock would be at 320. The opening stock at 339. Upside possibly capped out up here, sort of 360 pence level, which would be the 50-period moving average. But broadly speaking, I think these numbers don't look too bad for Balfour Beatty. I want to switch on to this chart. BMW yesterday, the stock hitting levels there not seen since the 1st of February. There's an announcement this morning. The company says it sees 2023 automotive EBIT margin 8 to 10%. Now, this is better than the 8.67% we had previously been seeing. This range, obviously the midway of the range is above the 8.67%. So I think broadly speaking, it should be interpreted as positive for BMW. BMW recently topping out at levels on this market. You can see here in the last couple of weeks that we've not seen since what was that highs we had back in November 2015. So BMW doing particularly brisk business recently before the recent fall, which again, like a lot of these stocks, taken down possibly for no other reason other than the fact that one particular sector of the banking industry or industry itself has been hit, which has taken down stocks across the board. So is this an opportunity as well to buy back into BMW at the start of today's session? Again, not a trade recommendation. I want to talk about Adobe as well. This is a company reporting after the bell this evening. I'm not going to show you the chart on this. It doesn't trade all sessions on the IG platform. Just want to highlight it as a stock to watch. It's the first quarter numbers after the bell tonight. We're looking for earnings per share at $3.68 on revenues of $4.62 billion. What I do want to show you a chart of is what's going on in US crude. This is the crude oil chart. Yesterday, we saw this chart pull back to levels not seen since the 12th of December. Big declines in the last couple of days. We've got a little bit of buying at the moment. OPEC has upgraded oil demand from China. It helped arrest this slide that we saw prices hit new lows for the year in yesterday's session. And it's exactly the same for Brent. If you look back at where we are there, we've got a break of that line of support taking us back there to levels not seen there since the 12th of December. Yesterday, crude oil inventories from the API increased 1.15 million barrels increased. This means that there's more oil in the system, which is another reason to sell this down, of course. This is according to the API, taken the rise of more than 56 million barrels so far this year. Gasoline stocks for distillates also falling as well yesterday from the API. Just one other chart I wanted to follow up on, just for no other reason other than just to follow up on another chart that I think is worth looking at, and that is some of these base metals. Second day in a row of declines today. You can see here we've got weakness creeping into copper once again. I think it's really all down to what's going to happen with China this year. That industrial production figure, I think it's going to be a little bit of a disappointment. That's possibly one of the reasons why we've seen copper sold down today. Industrial production not making the sort of strides on the upside in China that many had been hoping for. It's a question of just seeing how this sort of data develops over the next few months or so. But if you look at the grand scheme of things, this pullback that we've got at the moment is looking like it could well find support at 85.90. If you get a break of that, you're then on the way down to the 8,200 level. But at the moment, at least, it is sort of trading sideways at 8,700 broadly. That is it from me. About 10 minutes to go before the start of today's European session. Still looking for gains across the board. Do watch out for BMW at the start of today's trade. Also, one other stock I'm watching this morning is Balfour Beatty here in the London market.